But at Fundstrat, Sean Farrell is the head of digital assets research, and he's given me some informal sort of targets. One way he thinks of this is that if we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum's closer to 15,000. I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. I mean, it just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well.
Earlier this year, Fundstrat's Tom Lee quietly took on a new and revealing role as chairman of BitMine, an Ethereum-focused corporate treasury firm. While many in traditional finance are still struggling to understand crypto's long-term place in the financial system, Lee is already positioning himself ahead of the curve. His conviction isn't just theoretical, it's institutional. At BitMine, the strategy mirrors the early playbook of MicroStrategy's Bitcoin accumulation, but with Ethereum at the center. The thesis is simple. Ethereum is deeply undervalued, and the convergence of Wall Street with crypto, particularly stablecoins, is catalyzing a transformative moment for Ethereum as an asset and infrastructure layer. At the same time, Lee is anchoring a bold price forecast that reflects this confidence. Fundstrat's internal analysis, supported by technical strategist Mark Newton, sees Ethereum reaching $4,000 before the end of this month, a figure that, while already ambitious, is merely a stepping stone. The firm believes a move to $10,000 to $15,000 could unfold by year-end, or even sooner, depending on market dynamics. This isn't a headline grab. It's a valuation framework rooted in Ethereum's expanding real-world use cases and its ability to attract institutional capital. The reasoning goes far deeper than short-term sentiment or hype. Ethereum, as Lee describes, is not just a decentralized platform. It is a smart contract-based layer that's gaining institutional legitimacy at a rapid pace. Banks and corporate treasuries are waking up to stablecoins as an operational tool, and Ethereum remains the leading infrastructure supporting them. In Lee's eyes, this is Ethereum's ChatGPT moment, a viral, systemic reappraisal of its utility, not just as a speculative asset, but as a backbone for financial modernization. Layer that with BitMine's treasury strategy, raising capital through equity, growing Ethereum per share, staking for yield, and using market volatility to its advantage, and what you see is an enterprise-level blueprint for capitalizing on Ethereum's asymmetric upside. For Lee, Ethereum is no longer a speculative trade. It's an underpriced digital platform on the cusp of a valuation re-rating. A clean break above $5,000 would mark a decisive all-time high. But in Lee's model, that wouldn't even come close to the ceiling. And with that, we begin to understand just how profound the Ethereum opportunity may be. But there's another layer to this thesis that deserves a closer look, one that connects on-chain fundamentals with real-world business metrics. Before we get there, if you're finding value in this analysis, don't forget to like the video, subscribe to the channel, and drop your thoughts in the comments. Where do you think Ethereum is headed next? Thanks, and enjoy the video.
Well, I think Ethereum, is a chain that I think is getting a second look. I know that there have been criticisms of it in the past because of either how layer 2s and layer 1s interact or just really sort of progress and upgrades to the network. But to us, I think the real thing we have to recognize as we look at what's happening in the real world is that Wall Street is converging onto crypto, and they're choosing to do a lot of this work on Ethereum because stablecoins have completely changed Wall Street's mind about how useful crypto can be. As we've said, the stablecoins have created the ChatGPT moment for crypto because we're seeing consumers really use it in a viral way. Merchants are beginning to really love it, especially outside the US. And now banks are realizing it's actually a decent business model. We just saw Citigroup even just say that they're looking at creating a stablecoin, even if it's just to manage deposit base, but still, it is really Wall Street converging onto crypto. And at the end of the day, a couple things are going to be important. Wall Street wants to find a chain that's operating compliantly in the US, and they want to find a big one, and where there's already a lot of real world assets, tied up and on the layer one. And that's why Ethereum, we think, is going to become extremely relevant over the next decade.
Do you think that Ethereum can keep up?
Yes, and they just have to create the right incentives, between the layer twos and layer ones, and make sure there's just not too much gas out there, and that we can absorb that supply. But I think that's where, these treasury companies are playing a pretty important role, and they're earning money staking. And I think the reality is that if there is a rejuvenation of interest around any token or any token platform, it also rejuvenates people's creativity and interest in making it more usable. So to us, this ChatGPT moment, which is converging around Ethereum, I think is going to also help unleash a wave of innovation. It's no different than when ChatGPT first swept across Silicon Valley, and this is after everybody had invested decades on SaaS. But guess what? Now there's many, many, many venture-funded businesses around using AI and ChatGPT that are exploding and getting to $100 million run rate so quickly. Well, I think that's what's going to happen in crypto. I think this is a really big moment for the industry to realize that as Wall Street converges and they're bringing a lot of interest and bringing a lot of new users and a lot of new applications, that this could transform actually the importance of smart contracts and Ethereum. So I think Ethereum's sort of dominance could actually grow dramatically.
What's your price target for ETH as we head into the second half of the year?
Our price objectives at Fundstrat. So I wear a couple of hats. I'm the chairman of BitMine, but I'm also the head of research at Fundstrat. And actually I have a third role, which is the CIO of Fundstrat Capital. But at Fundstrat, Sean Farrell is the head of digital assets research. And he's given me some informal sort of targets. One way he thinks of this is that if we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum's closer to 15,000. And that makes sense. I think the layer one, as you get into layer one, you should apply a higher multiple to like sort of theoretical usage, because it's the same reason software companies get higher multiples than retailers, right? The more you're getting away from the customer and the more it's pure signal, you apply higher multiples to that business. And so I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. I mean, it just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well. At the core is our belief that Ethereum is dramatically undervalued as a token. That, and for the reasons I described, that crypto is seeing its ChatGPT moment, and really the second order beneficiary there is Ethereum. And so acquiring an asset that can appreciate by 10 times or more is a really good use of a treasury. In fact, MicroStrategy, when they began their treasury strategy, Bitcoin was 11,000, and it's 120,000 today. And so I think that's foremost where we're coming from. And some people say, well, why don't you just buy Ethereum outright? Well, an Ethereum treasury company can actually increase your ETH holdings per share by taking advantage of capital markets and volatility to raise capital. And they can also earn money from staking. And for instance, BitMine initially funded with $250 million of ETH, and that was closed on July 9th or July 8th. And then 3 days later, BitMine increased the treasury holdings by an additional $250 million. So in just 3 days, doubled the amount of treasury holdings, and that was as of Friday last week. So you can see that there is an advantage to a treasury company because what you thought you had was of ETH relative per share just doubled in 3 days based on just the company acquiring more ETH. And of course, that activity continues. So I think that there's an advantage to owning a treasury company that is using capital markets to increase your ETH holdings per share.
Much of the valuation framework Lee discusses draws from the concept of applying equity-like multiples to Ethereum's network usage. At the center of this idea is Circle, the issuer of USDC, which operates primarily on Ethereum and now commands an EBITDA multiple of roughly 130x. Lee notes that if Ethereum were treated similarly, priced in terms of its utility as financial infrastructure, it would imply a valuation closer to $15,000 per token. This comparative analysis doesn't just elevate Ethereum's theoretical upside, it underscores the growing realization that blockchains are becoming cash flow generating platforms, similar to high-growth software companies. In that context, Ethereum's position as the base layer for stablecoins becomes even more critical. Stablecoins like USDC and USDT are now viewed as tools, not threats, by major banks. Citigroup, for instance, has expressed active interest in issuing a stablecoin, not for speculation, but for deposit management and settlement efficiency. This shift in institutional mindset, Lee argues, is Ethereum's inflection point. Just as ChatGPT reshaped the tech landscape almost overnight, stablecoins are catalyzing Ethereum's revaluation. It's a convergence of regulatory momentum, financial necessity, and technical maturity that places Ethereum at the center of crypto's next secular bull market. And as the narrative deepens, we turn from the valuation models and market dynamics back to the core distinctions between Ethereum and Bitcoin. Because while both assets are rising, Lee argues that Ethereum has more to gain from what lies ahead. Let's get back to the interview.
We're still adamant fans of Bitcoin because to me, Bitcoin is, first of all, it is really the ultimate form of trust at the moment, and it is digital gold in an easy way. And if someone says, well, what does that make it worth? Well, gold's 22 trillion network value, so Bitcoin should be worth $1 million. And there's plenty of future businesses that can be built around Bitcoin because of its stability. Ethereum is a smart contract enabled platform, and so it is unique because you can actually store real things onto the blockchain, whether you use layer 1 or layer 2. And I think maybe the real killer app, and this is what stablecoins are showing, is that as we move into a world of like AI and we're trying to create units of pricing and to simplify the movement of goods, simple examples of like tokenizing things from the real world onto a blockchain, you couldn't do it really on Bitcoin because that's not what Bitcoin's designed to do. So I think as you're thinking of Wall Street converging onto crypto and then AI innovations taking place and the idea of using even tokens or stable coins around that, well, then that's really when it comes to saying, well, Ethereum really is the largest smart contract platform in terms of network value, and that's what makes it attractive. I generally agree with people who say crypto responds to global liquidity. And so if central banks are easing, then we should see it in crypto prices first. And that's why crypto actually is a leading indicator for the stock market. And the fact that Bitcoin broke out to all-time highs is actually bullish for the S&P. But the interesting thing is that crypto is still not that widely held. So I think that, Bitwise has a great stat. They say 95% of Bitcoin's been mined, and only 95% of the traditional finance world doesn't own Bitcoin. So there's a real mismatch. And so I think Bitcoin continues to be the leading crypto asset to watch. But to us, as risk appetite recovers, Ethereum and small caps are pretty highly correlated. And I think that that's why Ethereum, in percentage terms, has more upside for the next few years.
In Congress, there are 3 bills on the docket. Is the signing of these bills priced in, do you think? And if they don't get signed, how do you think that's going to reflect in the markets?
Well, there's always going to be an initial reaction, but then, the long-term reaction. I think, you know, nobody can really ever correctly predict how Washington, what path it chooses and what bills pass. But I think the reality is that crypto regulation is vastly improved over what we saw for the last 8 years and 12 years. And so I don't think anyone should be too discouraged by developments in Washington, but they should, of course, watch it closely. And then keep in mind that you can always have some things fixed through either reintroducing items or executive orders. So I wouldn't read too much into whatever happens out of Washington.
But is there anything that you've been watching that you wish someone would ask you about, or that you think is quite interesting that not enough people are talking about?
Well, I've been paying a lot of attention to earning. We're in the middle of earning seasons, and financials start to report in earnest. This week and next week, but there have been a lot of comments from these financials about stablecoins, and stablecoins are frenemies for the financial industry. So I think that's just something people have to watch out for, because they are both a opportunity, but it's also a threat to their legacy business. So you have to keep in mind that in some ways, the financial industry is one of the strongest and savviest lobbying groups, that they have a role in how crypto regulations can pivot in either direction.
Tom Lee makes a clear distinction between Bitcoin and Ethereum, not as rivals, but as distinct instruments for different market roles. Bitcoin remains digital gold, the most pristine monetary asset in crypto, with a long-term valuation ceiling potentially north of $1 million if it were to match gold's market cap. But Ethereum, in Lee's view, is where the functional economic activity is taking place. Its role as the largest smart contract platform positions it to become the foundational infrastructure for tokenized assets, stablecoin payments, and decentralized applications. In other words, it's where innovation meets valuation potential. As AI adoption accelerates and global finance adapts, Ethereum could serve as the digital settlement layer for everything from microtransactions to tokenized real-world assets. This use case is precisely what Bitcoin cannot fulfill by design. Stablecoins, for example, don't just represent a technological shift. They are simultaneously an opportunity and an existential threat to legacy financial institutions. That duality makes Ethereum's dominance both more precarious and more vital. And as Wall Street finds ways to engage with compliant on-chain finance, it will naturally gravitate toward the most robust, liquid, and battle-tested platform, Ethereum. And while regulatory uncertainty remains, Lee downplays its long-term impact. Legislation in Washington may ebb and flow, but the overall trajectory of crypto regulation is significantly more favorable than in years past. As Lee notes, executive orders and revised legislation can always correct course, and the financial industry's growing interest in crypto ensures that this space won't be ignored or sidelined. Instead, traditional finance is becoming a key player in shaping the future of blockchain policy, further legitimizing Ethereum's role in the broader capital markets. Finally, the BitMine strategy provides a tangible case study in crypto-native capital management. By using equity markets and staking income to increase Ethereum holdings per share, treasury companies like BitMine offer a levered bet on Ethereum appreciation while also generating cash flow. It's MicroStrategy for Ethereum, except with added yield, operational growth, and faster upside potential. That's why Tom Lee isn't just analyzing Ethereum from afar. He's now leading one of its boldest corporate plays. Ethereum is no longer the future. It's happening now. If you believe we're on the verge of a massive revaluation of smart contract platforms and the crypto rails that will support the next generation of finance, then Ethereum at $3,000 might be the opportunity of the decade. And let us know in the comments. Do you think Ethereum hits $15,000 this year? Let's keep this conversation going. Don't forget to subscribe for more deep dive analysis. Thanks for watching, and see you in the next one.